So we're now in January, and when we look back and reflect on what happened in 2016, there are a number of political, macro conditions that had an impact on the investment banking revenues. So I'm here with Izzy Udom-Ritkul, who is going to talk us through what investment banking revenues actually ended up looking like for 2016.
Thanks, that's absolutely right, Renee. We did see a lot of uncertainty in the markets caused by those political events. And it really varies in terms of the impact on the fee pool. If we look at the first quarter of the year, it had a really slow start to the year. In fact, we had the slowest start to the year since 2010. So it's, in 6 years, the lowest first quarter which we've had for investment banking revenues overall. However, if we look to each of the regions, Europe had also its lowest fee pool in over a decade.
Okay, and so if the first quarter was so slow, did that continue through the year? Did that change? What did that look like? Obviously with the election and Brexit happening a bit later on.
Absolutely, and again, it depends on what product you look at, Renee. So if you look at the M&A space, in the second half of the year we saw a big recovery in M&A, to the point where the month of October for M&A volumes was actually the highest on record. We saw volumes going through the roof at over 600 billion of M&A volume recorded globally. What that meant for revenues is that we then subsequently saw the highest revenues for M&A since 2008. On the other hand, though, if we look to the ECM markets, ECM hasn't fared so well. We saw a 25% year-on-year drop in the ECM revenues globally, which is the biggest drop across all of the primary capital markets.
Fantastic, thank you, Izzy.